Okay, again, it's a bit of a thin day for data points in the US. We've got our old friend, the Red Book chain store sales. Remember, this is a weekly number that looks at exactly that, what retail sales are like in chain stores across the US. And after a pick-up in late June and early July, the indicators resumed its downward trend. The last reading of just 0.3% was pretty disappointing. So we look to hopefully to see something in excess of that to try and provide a little boost for US retail sales, as it were, but we may not see it. And then we flagged these yesterday. Apple are reporting after the closes of Q3 figures for anyone that's in any doubt. The street forecast is for earnings per share of around $1.89 per share. That would compare to $1.40 for the same period last year. And in revenue terms, these numbers are astronomical, but we're looking for $49.3 billion of revenue. That would be a record on a quarter. That would compare to $37.4 billion that we saw in the same period last year. Interestingly, historically, the third quarter for Apple has been one of its slowest in terms of sales and revenues, but it appears that the street's expecting it to buck that trend.
Slight feeling of the market might have got a bit too overexcited about Apple in the near term.
Possibly, and I think people will be interested.
And the watch could be a bit of a Achilles heel.
It could be, and also I'm sure people maybe they won't be included in these figures, but they'll also be looking for an early read on how this new music service has been going as well. So Apple, of course, is probably the stock in the market that's got the most expectation. So it's probably got within it. So it's probably got the hardest job in not disappointing.